Hey traders, checking in on the stock market today. We have the continued rotation that we've been watching over the last couple of weeks out of our tech and high flyer names, out of the EV names, and into our laggard sectors. Pretty much the shiny objects that had huge gains and easy money all the way from last March until this February. We're now seeing those names fall out of style, and it's the dull, boring objects that did not run nearly as hard that are seeing monetary inflow over the last bunch of days. We'll look at what it looks like on the charts, and we'll also talk about when is it going to be the time to be buying these high flyer and tech names for the eventual rotation back into them. So before we get to the charts and technical analysis, let's just break down what happened, because oftentimes on a day-to-day basis, you can get tunnel vision and forget the big picture. We had an insane dump in March a year ago. We had an equally, if not more insane V-shaped recovery where there was money growing on trees for bulls. There were names that went hundreds and hundreds of percent with no longer-term consolidation. They went straight up. Everybody focused on those names because that's where the opportunity was. And I'm talking the tech sector, I'm talking Tesla and the EV space, and I'm talking a bunch of our stay-at-home names. Those all were going up. And at the same time, we had very, very weak bounces in all of our laggard sectors. Financial, energy, airliners, cruise liners, hotels, etc. Very weak bounces. We then hit a point of maximum euphoria. I hit maximum euphoria earlier this year when I had 170% of my annual capital gains goals in 5 weeks. I had a huge light flashing in my brain. Lock it in. This is not sustainable. This is euphoria. You know how euphoria ends. In my experience, I'm used to euphoria ending with everything dropping. So I was looking for a market dump. That doesn't mean I'm going short. That doesn't mean, I'm calling tops. It just means be ready. But what we're seeing take place in the last 2 weeks, and again, it feels like it's been forever. It's been 2 weeks. We are seeing rotation out of the shiny objects and the names that have not consolidated after running 500, 1,000, 2,000%. And that money is going into the names that did not see runs anywhere near as significantly. It makes sense. These names benefit from an opening economy and from vaccines and from things of that nature, but it's also just risk and reward. Are you going to have better risk and reward putting your money in NIO that has run 3,000% and not seen any monthly consolidation since doing so, or in a name that has been setting weekly higher lows in the energy sector slow and steady over the last 6 months? So that is where we stand right now, and we are seeing that rotation take place, and it is my assumption that we're going to see the holdings of SPY shift, because the holdings of SPY have significantly increased to have more and more tech exposure over the months and years over the last couple of years. And in my opinion, we're going to see tech exposure drop a bit, and we're going to see the financial sector and energy sector exposure tick up a little bit. So we'll be watching that shift. And that's the other thing. A lot of people right now are getting crushed in their portfolios, but the S&P 500 is 4% from an all-time high. How does that happen? Because everybody is focused on the shiny objects, and those are the ones that are pulling back the hardest right now. So we're going to go through our technical analysis right now. Then we'll talk about longer-term game plans, because there will be good buying opportunities in the tech sector, in the EV names. It's just a question of when. So I will share what my game plan is going to be in that perspective. And then we'll talk about bathtubs. So SPY, coming down towards support. 378.23 is our low of last week. Increasing bear volume, close at the low of the day 2 days in a row. That support level's in play. If it breaks the daily downtrend, just continues. So we got our low of the dump, high of the bounce, lower low, lower high. And mixed in here, we have some days where all sectors were going up and some days where all sectors were going down. But again, for the most part, over the last 2 weeks, the majority is QQQ down, XLF up. And XLF hit all-time highs today. If SPY breaks 378.23, we go right back to our weekly time frame, and we still scout our weekly high or low, anything above 368.27. We will have to see either continued, pretty much the only way we're going to lose this weekly support, in my opinion, is if the tech sector weakness continues and the financial sector loses its daily uptrend. So that's going to be key to be keeping an eye on. Again, money is not leaving the market. Money is rotating around. It's when money leaves the market that we see all of our major sectors at their lows at the same time. Next time we bounce on SPY, we're just looking for an hourly low or high. Next time we change the hourly trend for the SPY bulls, we're just looking for a daily low or high. Anything under 390.92. We could bounce 2% tomorrow and still be looking for a daily low or high. So keep it simple. It's a daily downtrend, and we're watching for as long as the bears keep control of that daily downtrend. IWM, low of last week, 214.81, still support, still in play. We're about 2% above that level. If that level breaks, same story. We zoom out, we scout our last weekly higher low of 204.84. Bulls still have a good bit of space to work with, and the reason they do is because IWM has less tech exposure and has more financial sector exposure, and that is why it's holding up better than QQQ. So QQQ is the weakest link. We are dropping down and breaking to lower lows, increasing bear volume, close at the low of the day 2 days in a row. Monthly consolidation is underway. The last time we saw very brief monthly consolidation was down at 260, but we haven't seen any real monthly consolidation since going 100% from the last March lows. So again, you look at this chart, you show me this chart, and I would say we haven't even really started consolidation. There's no red flags on the longer term time frame, which is why we will be looking to buy tech, EV, and these names that are out of favor right now. We are scouting them for monthly higher lows because so many of those names have tons of space for those monthly higher lows to form. We could drop down to the EMA 12 here. That would be a drop of 9%. And we would still be looking for a monthly higher low. The key is patience. Let's just talk about it now. So what's the game plan? Do you scale into weakness? I don't like that. I don't like scaling into weakness because, again, we could drop another 9%. Let's look at NIO and Tesla. They have been running extremely strong, again, massive gains, and finally getting their weekly consolidation. You show me this chart and you tell me it's the monthly time frame. I say, yeah, our climax top has been hit, but we're absolutely looking for a monthly higher low. So determine if you are aggressive or conservative. If you are aggressive, you're going to scale into weakness and you're going to break up your orders and you're going to say, I'm going to enter 20% at 41, 20% at 38, 20% at 35, 20% at 32, 20% at 29. And that's your game plan. Aggressive. If you are patient, you know the daily trend has to change before you even consider a monthly higher low being set. I don't need to nail the bottom. If we bottom out on NIO at 32, let's just say 35, and we then bounce, and I make an entry 10% off the lows. Darn, I missed the bottom by a lot. I'm in the upper 38s. And then we bounce to set a monthly lower high at 52. I just made, I just made 40%. So again, you don't have to nail the bottom, and the daily trend change will be the first baby step towards setting monthly higher lows. Volume will be a clue. Watching the rotation will be a clue. And why the reason this rotation has been taking place for 2 weeks is big money just can't exit hundreds of millions of dollar positions or billions of dollars of positions in one day. They have to do it slowly. And that is why we're seeing these big bounces that then drop to lower lows, because big money has been using those bounces as opportunity to continue offloading. So they don't want to crash the market, but they are selling into the bounces, which is why these big time bounces are being erased. So establish game plans. Write down your game plans and determine if you are patient or conservative. Get a shopping list. And again, you don't have to act on this weakness. You can wait for the bulls to prove it to us on the shorter term time frames. So I'm interested in NIO, but I'm going to be very patient. XLF, all-time highs, the highest price in the history of the universe that the financial sector has ever hit was hit today. And that is why you don't see the volatility sector exploding on all this tech sector weakness. You know, if you told me the tech sector is going to be selling off pretty darn hard end of February into March, I would assume that SPY would be getting hit harder right now. And it's not because the financial sector is offsetting it. Our line in the sand support is 32.19. If SPY is going to lose the weekly uptrend, in my opinion, we will have to see XLF break that level. It's a bull break with a lack of follow through, but we did just go straight from 32.19 up to the upper 33s. So that was a solid 5% move. As long as the daily higher lows keep forming, the bulls keep their control. So line in the sand level clearly set. We know the healthcare sector has been weaker. For a while now, we confirmed a weekly downtrend back at the end of February. The third week of February, we knew that the healthcare sector was weaker than most sectors. And it's just continuing. Daily bear flag confirmed. Daily bear flag confirmed. We're looking for a monthly higher low, absolutely. But again, this monthly consolidation has hardly even started. We bounced off the monthly EMA 12 the last 2 times we consolidated. That's down at 107, which is another 4% to the downside. If our major sectors start losing monthly uptrends, then we say, okay, I don't know if I want to be buying these dips, because that is a much more longer term structural red flag. But as long as they look like this, we're looking to buy monthly higher lows, absolutely. Biotech sector, massive weakness, lead bear. It was the lead bear yesterday as far as sectors are concerned, and it followed through today in a big way. Daily RSI is close to oversold. Monthly, we did not consolidate on the monthly time frame from 100 up to 175. 75% move with no monthly consolidation. Big bearish reversal candle last month, confirming it this month. And again, EMA 12 is still a ways away. So that's a potential short-term target to be looking at, 10% away. We bounced off it last time. But a daily trend change will be baby step number 1 to set monthly higher lows. Semiconductors, holding up better than the tech sector, though not by much. We did break support here as well. Just barely. Weekly, still in an uptrend. Weekly last higher low, 224.93 is now the support level that we care about. If we lose that weekly support level, look at this monthly chart. We have not seen monthly consolidation in 170% since the COVID lows. Tons of space for a monthly higher low and to remain healthy. TAN, the solar sector, dropping right back down to our lows. Monthly time frame, we ran up massively. Look at money growing on trees. Euphoria, 500% in less than a year. Monthly consolidation is inevitable coming from that kind of euphoria. If we see a bear break of 91.51, EMA 12 is all the way down in the upper 70s. Daily RSI is approaching oversold. 79.21 is the next clear level. So there will come a point in time, sometime in the next 3 months, where we are looking for these higher lows on the monthly time frame in this grouping of sectors. And again, I cannot stress enough how mentally helpful it is to just group them in 2 sides. MSOs, tightening up on the daily, holding up way better than the broader market, but you can't escape that broader market correlation. You can hold up better, you can have a bullish correlation, but we're not going to all-time highs as long as the broader market is in consolidation mode. So we have our low, high, higher low, lower high. Bulls now need to hold 46.35 to keep the little daily higher low intact. Bulls are positioned well for if we do see the broader market start to bounce and QQQ start to bounce. We're positioned well here, but have to see that happen. And that's one of the reasons I don't like holding long-term positions, because it doesn't matter what the company sells in this automated day and age of trading. If a sector that it is tied to is pulling back, it's going to get dragged down. It can get dragged down less, but it is at the mercy of correlations and automated trading and bots. The VIX, green day, not a huge green day. Why? Because the energy sector was green and because the financial sector hit all-time highs. But our higher low is set now, 2250, and we're looking up at 3120 as a key level. If we reject from it, we just stay in a tightening range. If it breaks, it'll be a lot more notable, but we're not going to break that level unless all of our major sectors are dropping at the same time. One more thing to note on the tech sector here, the NASDAQ futures is still holding a support, but just barely. So that's what I'm watching tonight. It is possible to be a double bottom, but I would need an hourly trend change by the bulls to even consider it. But it is still there. So just want to make note of it. It doesn't look like it's likely to hold, but that would be a possibility pretty much if we bounce from now into tomorrow morning. The dollar, trying to set a daily high or low. If the bulls change the daily trend by getting over 91.40, then the weekly trend change is going to be right behind it. That could add a little bit of downward pressure on markets as well. That could push for some further monthly consolidation. Let's look at SPY. SPY is still in the weekly uptrend, but again, SPY has not consolidated on the monthly time frame besides a very brief little higher low at 319. We then ran over 20% to higher highs. But again, an 80% plus move with very little monthly consolidation. Just prepare for monthly consolidation in anything that has not seen it significantly since those lows. Silver, forgot gold. So gold dropped to a lower low, but no bear follow through. 4-hour downtrend is very clear. Bulls are hoping that a 4-hour falling wedge is forming, but we can keep it very simple. If we don't break 1741, the bulls prove absolutely nothing to us. Have to change the 4-hour trend. Even when we do, we just zoom out and scout a daily lower high. Silver's the same story. Double bottom, but anything under 2690 is just a lower high. We're seeing the metals pull back. We're seeing certain stock sectors pull back. All of these things were extremely strong the second half, I should say the last 3 quarters of last year. Rotation is the name of the game. Miners still very weak. We never changed the hourly trend. We had a great day yesterday for the bulls, but no hourly trend change. We gave it all back. Have to confirm an hourly trend change to shift short-term momentum. Even when we do, we just zoom out and scout a daily lower high. Oil bulls set a daily higher low. Their one commodity still keeping strong. Daily higher low is now set at 59.24, and we're watching for potential head and shoulders. We would have to reject from 63.81 and break 59.24 to see weekly consolidation take place. So there is a potential top fishing play approaching. And natural gas daily bear flag is still possible. We changed the 4-hour trend. It's not entirely convincing, so that is a possible bear flag still. We're still in a 4-hour uptrend, and we're looking for a 4-hour higher low right now. But when we lose those if we lose those 4-hour higher lows, odds of a daily bear flag increase a good bit. So we are seeing the markets right now. I used this analogy recently, but it's a snow globe. It's being shaken up. Things are shifting. We had tunnel vision, one direction mindset, everything clear for a very long period of time. The bulls in these names that ran insane amounts got complacent. They can't imagine a pullback of 30%. What do you mean they only go up? We keep seeing the dips being bought every single time for 9 months. And now that has changed. So we will patiently wait for signals that it's changing back again. And we have to see the bulls prove it to us. All day today, QQQ did not prove a thing to the bulls at any point in time. The 15-minute downtrend right out of the gate, all bears, solid bounce, didn't change the trend, lower highs and lower lows all day. I didn't do a whole lot of trading today. I'm sitting back and I'm sitting on my hands and I'm being very patient for however long it takes. Maybe my trading frequency over the next month is going to drop to 25% what it was for the first 2 months of the year. And that is perfectly fine with me. And that's because I want to preserve those gains. So I was very hands-off today, but what I did do is manage the positions that I already had. And that went fairly well. I covered some of my QQQ short. And if you've been watching these videos for a while, you've noticed I used to short SPY to hedge my portfolio. And then when it became very clear the rotation that was going on, I've started to use QQQ as my short hedge because obviously it's very weak. It's weaker than SPY because XLF is not a factor. So I exited some of my I'll use a 5-minute time frame. It was a little bit early on my exit, but I exited half of my QQQ short right here, and I re-entered it at a really good spot at the 15-minute EMA resistance. I know this bounce is just looking for a 15-minute lower high compared to the high of the day, so I re-entered my short and then held it, and I'm still holding it because we closed extremely weak. So that's helping my portfolio offset weakness. My account dropped a small amount today compared to yesterday. If I wasn't in any short positions, it would have dropped by a 3-day maker plus. So offsetting some of that weakness and being very patient and protecting my capital. Bathtub. So yesterday I was reflecting, and I was reflecting about my rough start. There's a lot of things you could point to. My rough start for the first 2 days of the month. Tiny time frame, but clearly a shift for me. Shifting market conditions, absolutely a factor to that. But I was reflecting in the hot tub last night, and I realized I didn't take a lunch break the last 2 days, which means I was sitting at the computer from when I start live streaming at 9 a.m. to when I stop live streaming at 10:30 a.m. Didn't take a lunch break, which I usually do 12 to 1, which is when I get off the computer, I go outside. So that means I'm sitting on the computer for 7 hours in a row, more than that, because then I do these videos. 8 hours in a row, literally. You know, I get up to take a drink of water or pee or whatever, but that is not healthy or sustainable. So it is clear to me that that is a factor as well as to why I'm not in my flow. When I'm in my flow state, I make a winning trade, it's easy peasy, and I'm up and out the door, and I'm outside, and I come back with a fresh, clean slate in my mind 20, 30 minutes later, and I attack the next trade. And I did not do that this week. And I didn't even realize it. And I would not have realized it if I did not intentionally take the time to self-reflect. Self-reflect. I do it in warm water. Whether it's a bathtub or a hot tub, for some reason, that is my happy place where I have really good ideas. I brainstorm really well. I mean, the videos that I've been making over the last 6 years and the educational content, that all comes from bathtubs and hot tubs. I cannot suggest enough that you make a routine. I know the women watching this are already on board. Men, I don't care if you don't think it's manly. Real men take baths. Wash your bathtub. Get in your bathtub. Light some candles. Go all out. And reflect. Set that time. Brainstorm. Reflect. How can I be a better person? How can I be a better trader? What are my goals? What are the steps that I need to take to achieve my goals? If you give yourself the time to do that, you're visualizing the steps that you need to take to improve in ways in your life that you want to, and then you enact those game plans that you lay out in your head, or you write down on paper, or whatever is good for you. Hot, warm water stimulates the neurons firing. Maybe there's other things that you can use to stimulate those neurons as well. That depends on you as an individual. Light some sage, or some copal, or some frankincense, some candles. Nice and calm, not a care in the world, and use your brain. It's the most powerful tool in the universe. Done ranting. See you tomorrow. Do good things. Leaves from last year, breaking down nicely. I can use this to cover around transplants that I make in beds and just use it as a mulch to stamp out weeds, and it'll just keep decomposing back into the soil. You being a good girl? Corn cob massacre. Mom and Dad duck are back.